Hello, and welcome to our first Tax Professionals webinar for 2025. Thanks for tuning in, and my name's Sky Webb. Firstly, we acknowledge the traditional owners and custodians of country throughout Australia and their continuing connection to land, waters and community. We pay our respects to them, their cultures and elders past and present. Today, we're joining you from Ngunnawal land, so welcome. In our session today, we'll be looking at the future tax environment, which is going to include what's new for tax time 2025, preparing your practice for tax time, cybersecurity, and much more. For our discussion today, we're joined by our expert panel. Let me introduce them. So in the studio here in Canberra, we have Rob Thompson, Assistant Commissioner Individuals, and you might recognise him as our Tax Time 2025 spokesman. Joda Walters, Assistant Commissioner Enterprise Solutions and Technology, and an extra special welcome to our guest, Tim Sandow, Tax Partner from BDO. And of course, a warm welcome to all our guests watching live and on the video replay. So if you're joining us live today, please engage with the discussion in the live chat facility. You can post a comment or you can ask a question. And we'll do our best to answer as many questions as we can during today's program. Your questions help us guide us on what we want to know more about and how we can improve the information we provide you or we send out. If we can't get to your question today, continue to engage with our web material, open forums and newsletters for key tax time updates and other important information. Now, let's get started and kick off our discussion with a look at the focus areas this tax time. So who better than to ask than the tax time spokesperson, Rob Thompson. Hey, Rob, thanks for being here today.
Thanks for having
me. So what are some of the focus areas for tax time?
Yeah, so Sky, much like last year, our focus for this year is about back to basics. So just reminding taxpayers around a number of the basics where we continue to see them kind of just making mistakes that we think are avoidable around record keeping, nexus, apportionment, and our focus around some of the issues where we continue to see people make mistakes around work-related expenses, working from home, and people not including all their income in their tax return, especially when they have things like side hustles or maybe some investment income. We are continuing to make sure that we're making people aware of scams, identity theft, and really starting to push the ATO app. And the reason why we're pushing the ATO app is that we've released some new real-time security messaging features where if there's changes to your account, say someone changes your bank account, if the person has the app and they have their notifications on, they'll get a message saying, did you do this? And if they didn't, then they can lock their account. So really important that people start to use that. Now, agents will be able to see those messages that are sent out in the comms history, so they'll have visibility there. And agents will still be able to view and manage the tax affairs of their clients while they're locked. But really important for individuals we think to take the use of the app up to protect themselves and their identity and their tax records. So we're encouraging people to make sure that they have that they've got their use My ID and they've got their credentials there as high as they can. That they've linked their MyGov to their ATO using the My ID and that they've downloaded the app. Now that feature has come out, and for those that have automatic updates, it's on there already for the ATO app. For those that don't, it'll be pushed through soon. But what would encourage everyone is to always make sure they've got their notifications and their updates turned on for their ATO app. And we actually think it's a really important thing for tax agents as well to do, because if tax professionals use the ATO app as well, they can also protect themselves from security issues and fraud as well.
Fantastic. Thanks, Rob. Now, are there any changes this financial year that the profession needs to be aware of?
Yeah, so a few. With respect to our working from home fixed rate method, we've upped the amount to 70 cents per hour that someone works from home. All the eligibility and record keeping requirements are the same as last year. It's just the rate that's changed. And the same for the fixed cents per kilometre method as well. That's now 88 cents for this for the 24-25 year. Once again, there's been no change to that. But a reminder, for both of those methods, if your clients are using them, And we do see some people then try and still claim expenses that are included within the base of those rates in their tax return separately. So we're just reminding taxpayers, not to double dip, bit like good party etiquette. You don't double dip your chip in the guac when you go to a party, so don't double dip on your tax return. So the other one that will impact tax agents this year to be aware of is pre-fill for your compromised account. So in previous years, tax agents had to call us to get that unlocked for their client, where the client's account was compromised, and they kind of then had it open for 48 hours. We've reassessed our position on that and the risk associated with that when it's the tax agent that's filling that information. And so for this year, there'll be no difference in the pre-fill experience for tax agents, whether the client has a compromised account or not. Now, that's only for the tax agent. The taxpayer will still have those restrictions on their account unless they've managed to get their online access strength to the highest strength possible. But a change for tax agents that we think will make it easier for you to lodge your client's tax returns this year where they have a compromised account.
Excellent. It sounds like a great change. Now, I'm just looking at, we just might keep on going at the moment. I've got one, maybe you can answer this one, Rob. So I've got one saying to claim SG payments, we need to pay them before June 30, but the final pay for the year is on the 29th of June. Have I put you on the spot, Rob?
Probably have a little bit. So super guarantee payments, there is some rules around them. So make sure, I think I'll just say that you are referring back to the website to make sure that you understand what's there and what you need to do.
Thank you. Okay, so we're going to move on to work-related expenses. Are there any golden rules to note for claiming work-related expenses?
Yeah, so there's obviously we continue to make sure that people are aware of the 3 golden rules when it comes to claiming a work-related expense, and they are that people have had to pay it for themselves and they weren't reimbursed, that it must directly relate to the income that they're earning, and they must have a record normally in the receipt to prove it. Now, here, we're trying to make sure that people understand it needs to have a direct connection to their actual work. We do see some claims where it's private in nature, even though it might be something like typical normal clothing or they're getting drinks at work that they think they can claim because they're at work. So people really being aware of what expenses you can and cannot claim on that. And in that, we're telling people to have a look at the 40 occupational specific guidelines we've put out, or have a chat to your registered tax agent so they know what they can and cannot claim. But also the bit there that we are seeing a lot of some taxpayers obviously continuing to make the mistake that where they're using something or the expense relates to something that's part income earning but is part private in nature, that they do need to apportion that expenditure.
Okay. And slightly related to that, I suppose, around the records, I've got a question from Sam. How long does my client need to retain their records?
So generally, and I'm going to say generally, it's 5 years from the date of lodgment of the tax return. Now that can, for individuals, that can change depending on the claim and what it is. And when you've got things like capital, where it relates to capital gains, or you've got carry forward capital losses, though those record keeping times can change. But generally it's a 5 years that people need to keep those for. Excellent. But it can be longer. So there's a lot of information if people do need to know that, and they can point their clients to the ATO website that outlines the different record keeping requirements.
Fantastic, thank you. Might bring you in here, Tim. Is there anything else you'd like to add on the professional's point of view and their role in regard to the 3 golden rules or nexus?
Yeah, thanks, Guy. I think the key thing really is to remember that it's the client's tax return. And so our role as a tax agent is we don't necessarily need to see all of the receipts that the person's got for all of the expenses they want to claim as deductions. But our role, we have to remind them that they need receipts, as Rob said. But our role as agents is to make sure they're taking reasonable care in the we take reasonable care in the preparation of the return. So it's really then about sort of standing back and looking at the return and using our level of professional judgment and experience and thinking, when this client comes to me and I know what they do for a profession, are the things that they're trying to claim deductions for, does that actually make sense? Are they the types of expenses we'd be expecting? And also, is the quantum at that level that we'd be expecting as well. So it's really about sort of standing back and using that sort of judgment, if you like. It's really interesting. I think, Sky, we, sometimes you get the client who comes in and says, well, my mate in the pub says that I can claim this as a deduction. And of course, that doesn't necessarily mean it's true. But we're increasingly getting someone who's saying, I've put this into ChatGPT and ChatGPT has told me that I can claim a deduction. And my comment to that is, can I just see the question you asked? Because you may not have asked the right question. So it's just sort of interesting observing what's changing. I guess the other thing that sort of really changed, from a tax agent's perspective for this year is that the real focus we've had from the Tax Practitioners Board and the changes to the Code of Professional Conduct. So it's made it, I guess those changes have really come into effect for everybody from 1 January 2025. And what we're really focusing on is that you absolutely cannot make a false misleading statement in a tax return. So in the past, maybe some people were more relaxed about it, but the penalties now for getting it wrong, you can potentially lose your practicing licence. And I guess also, if you think about breach reporting, in the past, and this may not sound right being in an ATO audience, but maybe in the past we were sort of more worried about, well, will the ATO find out that they've overclaimed? The risk now is that if you put in that tax return and it's got an overclaim in it, and that person goes to another agent next year, under those mandatory breach reporting rules, that new accountant will look at it and say, that's not right. I wonder whether I should actually be reporting this, reporting Tim into the Tax Practitioners Board. So you've sort of got that extra level now of being worried about, this could actually come to light. And so it just means that as you're sitting there and your client's telling you, you must claim this tax deduction or else I'll go somewhere else, you really have to sit back and say, I think I might just let them go, because the risk of me lodging a tax return that I know is wrong is just way too big.
Yeah, excellent. Thanks for that insight. Well, we're now going to turn to investments. So, Rob, can you tell us about some of the common errors we see on rentals around expenses that can be claimed?
Yeah, so maybe one of the main kind of areas we're focused on is really around apportionment and private use. So people not apportioning their expenses that they might be claiming with respect to their rental property and the income generated from that rental property, and there's a few elements there but also apportionment more generally. So not apportioning properly for ownership interests, but then not apportioning for private use when they use the rental property. So if they're using it for if they rent it out for part of the year, but they use it for part of the year. And also where they've taken out an investment loan or a loan, and part of it is to fund the rental property or their other investments that are generating income, and part of it's for a private use. And people thinking, well, once they've kind of paid off the first bit of the capital that related to the private use, the rest is fully tax deductible, and they don't need to apportion anymore, when they actually need to continue to apportion for the whole life of the loan. So there's some areas where we continue to see some mistakes being made, really around apportionment across a number of issues, and then one of them being apportionment around private use. So that's one area. Another area is around the confusion sometimes that people have between a repair and a maintenance. What's capital works, what's a depreciating asset, and what's an initial repair. So, even when you buy the property and it needs some repairs, that they are obviously capital in nature because they were there when you bought the property. So that's the difference between those is an area we continue to see some mistakes being made by investors. And just reminding people that if they are spending money on their property, to make sure they understand which one of those it is, but have good records, and have good records from when they first enter into the investment, because that can help them to get it right every year. It can also help them then to make sure they get their capital gain or loss correctly calculated when they dispose of the property. And then Tim might be able to talk about this as well a little bit, like how they're renting it out also is something for them to be aware of and keep around their record. around record keeping as well is really important. So, if they're only renting out part of the house through like Airbnb or one of those, if they're using it part of the year for their own purposes, as a holiday house, all those things can impact the tax implications, but also the records that you need to keep. So we've been encouraging people, if they're thinking about entering into buying an investment property, to either look at our investment toolkit, which provides a lot of information, or speak to a registered tax agent before they actually go and buy the property, because we see that sometimes there's some misunderstandings about what they can and cannot claim and when, and that can lead to some differences in results in terms of from a tax result than probably investors first thought when they're thinking about buying an investment property. But I don't, Tim, if you've got any thoughts around investment properties.
Yeah, look, I think you've probably covered it a lot, Rob. I mean, the questions we often see are that capital versus revenue thing, versus repairs. So someone's done something which has gone well beyond just actually replacing what they what was there beforehand, and they've probably improved it, and they've added a carport, or they've done something else as well, rather than just sort of replacing some of the cladding. So I think that sort of whole repair versus capital thing, and as you've said, Rob, that particularly in that initial time when they bought the investment property and they want to do it up and get it ready to get the maximum rental. You mentioned holiday houses. I think that's also sort of something that comes up quite a lot. Is the house genuinely available for rent? And we would always encourage clients to talk to us rather than maybe getting advice from a real estate agent, because real estate agents are great at the job that they do, but unless they're registered as a tax agent as well, they probably shouldn't be giving tax advice. So we would certainly encourage our clients to speak with us before they do any kind of major investment, just to make sure that what they're planning to do, and particularly if they're crunching numbers to see if they can make it work, they've actually genuinely got it available for rent and they can claim those deductions.
And the available for rent one's interesting, Tim. I had a friend who told me they were looking at a place, they've been told, well, you can rent it out, but you can use it for all the holidays, you can use it for your family home, and they'll probably told some stuff not by a registered tax agent about the tax outcomes for that. And I just went to them, mate, just go and speak to a registered tax agent, have a look at our website and make sure, because I think there's some misconceptions there about when things are actually genuinely available for rent. If you're using it every Christmas, all the holidays, if you're putting it at an excessively high rent compared to everything else in the market. So that's why we just continue to encourage people to make sure they are getting good advice early on or before they invest to really understand the impacts, but also make sure they understand the record keeping requirements.
Yeah, and Rob, you mentioned as well about the sharing economy and Airbnb, and I think that does add an extra layer of complication to this as well, because things like the main residence, and we're going to talk about that in a minute, the main residence rules for CGT, you sort of think that's pretty straightforward. But then you add on to the complication of, so I forgot to actually rented out a couple of rooms, or we were away for a month, so I rented out the whole house. And interestingly, you actually get quite a different tax outcome, both in terms of the this year's tax return for that rental income, but also sort of when you go to sell the house. It's quite a different tax outcome if you've been renting out a couple of spare rooms versus renting the whole house for a period of time. So having those sorts of conversations with your clients and asking a couple of extra questions is really important.
Now, these topics have sparked a lot of questions. So I've got from Grisbull, is a credit card statement and bank statement sufficient if the client has lost his or her receipt? So there are record keeping requirements. So there's two elements there. There are record keeping requirements which are in the Tax Administration Act about what your record needs to include, or your receipt needs to include, and that includes the name of the supplier, what were the products or service that was supplied, the amount you paid for it, the date, and the date of payment. So typically a bank and a credit card statement on its own won't be enough. And I know you had this question last year as well. Someone said to me, well, Rob, like if my client's a tradie and he goes to BP or one of the other fuel stations, obviously he's buying fuel, he couldn't be buying anything else. Like, I don't know, chocolate milk, sausage rolls. Like there's so we definitely do need to be able to substantiate the actual
tax expense. Where people have had their records lost or destroyed, there is information on our website, and we can help with reconstructing those. But generally, it is the responsibility for people to keep their records and their receipts. I did talk about the ATO app earlier. We have a My Deductions tool on the ATO app that allows people to take photos and keep all their records there. And they don't need to use that just if they're lodging online themselves. They can actually share that information with the tax agent. So once again, a good reason for people to use the ATO app, and they can then share that. And then if they've lost the receipt, the physical receipt, they've still got the copy they've still got the copy on their phone through the app. I know there's a number of other software tools there where you can now take photos of your receipts. So we can accept digital receipts. It doesn't need to be in paper, especially for some of those receipts you get where they kind of fade after a month or so. We've all had those. I think it's just about making sure people are keeping a copy of their receipt in some format. It doesn't always need to be paper.
Yep, excellent. Yeah, the receipts go to the bottom of my bag. And, yep. So then John's asked, an internet connection is required for a client working from home. As such, it is a fixed expense, irrespective of whether my client uses it for business or private use. Can he claim 100% of the expense?
What I can say is the expenses people can claim are always factually dependent on the situation of the client, right? So, but what I would say here is there are, for people, if they're working from home, we do have the two methods. So we have the actual method where people need to work out the actual amount for each type of expense that they're claiming, or we do have the fixed rate cents per hour someone works from home. There are record keeping requirements associated with both of those. You do need to show that you are that you are incurring some additional costs. So your client can use either one of those, and they can have a look at those, and on the website as well for specific types of costs for people working from home. It does talk about, for example, phones, keeping a month's worth of log and using that across the whole year as to kind of demonstrate the amount that's personal or private in nature versus the amount that's related to your work. So it does give you some examples around how you can substantiate the different expenses. So have a look at those. Probably not going to give advice on a specific fact pattern because it always is factually dependent, but there's some good information on our website about both of those methods someone can use.
Thank you. Now, Tim has already mentioned capital gains. So, Rob, do you have any tips for main residence exemptions or foreign residence CGT?
So I think Tim's probably answered a lot of that before. I think obviously you can get the main residence exemption, but it is limited in certain circumstances. It's going to depend about if you've used that property for income generating purposes. Typically, you can only claim one property as a main residence exemption unless you're moving. There's also things like the 6-year rule that can be considered. So I think for tax agents, when it comes to their clients claiming the main residence exemption, it's just about asking them questions around how long they've lived in there, if they've generated any income, if they've rented a room out, so to making sure that they can work through those questions to understand the right tax outcome for their client, given kind of, especially with some of the sharing platforms now, how much easier that is for people to potentially rent a room out or, at least their property out for a month while they're on holidays. So people need to make sure they've thought about that. On foreign residents, so capital gains for property. So from 1 January, there were some change to the foreign resident capital gain withholding rules, where there's no longer the threshold now for the property value, and they've increased the rate to a 15% withholding rate. So just a reminder that applies to foreign residents and Australian residents. So if your client is thinking about selling their property, making sure that they apply early on to get their foreign resident capital gain certificate. It can take up to 28 days to process, so don't tell them to wait too close to settlement. If they're going to do it, get it early. It's valid for 12 months, so they don't need to wait. And also there though, if each person that has an ownership interest in that property actually has to apply for a certificate. So making sure, if it's a couple that own the property, that they're both applying. They do that as early as they can, and then that's one less thing they need to worry about when they're selling their property and moving and all the other kind of things you've got to worry about at the same time. They're probably the key takeaways, I think, for tax agents to remember.
Fantastic. We're going to move on to something that I get a bit confused about as well. Can you tell us the difference between the Medicare levy surcharge, and the private health insurance rebate?
I can, but I'm also conscious of time, and this could take 20 minutes. I think what I would say here is there's probably two tips in talking to your clients that we think tax agents probably just need to kind of make sure their clients understand. And one is that if their income has changed, so if their income levels have changed dramatically, that can obviously impact whether they've got to pay the Medicare levy or not, but it can also impact the amount of private health insurance rebate they get. And because the Medicare levy surcharge, it impacts the amount of Medicare levy surcharge, but because they don't have those right, then at tax time, both the Medicare levy surcharge and if they haven't been getting the right private health insurance rebate can actually result in them getting a debit assessment. So if you see them changing their income levels, making sure that they understand that whether they might be starting to need to think about the Medicare levy surcharge applying, but also making sure that they've told their private health insurer about the change so that they're getting the correct rebate during the year so they don't have that problem at tax time. And also the other thing is making sure they understand who they need to have an appropriate level of private cover for. So that is about making sure they have an appropriate level of private hospital cover and making sure that it covers their spouse, it covers their dependents, children. And I think the other thing is they need to have it for the full income year. I know occasionally at this time of the year we see adverts that say, avoid the tax man, don't forget to get your private health. But like acknowledging if I get private health now, I'm not going to have had it for the whole year. And so that's going to change the tax consequence. So they're probably some of the main things just to make sure your clients are aware of when it comes to the Medicare levy surcharge and also for making sure they've got appropriate level of health cover are probably the two main things for people to focus on.
Thank you. I know who I'm going to be calling after this. I'll call my health fund. Okay, so that's great information. Now I'd like to move to discuss improving lodgment performance. And I've got a question here from Chris saying, our practice is currently behind in our lodgement and it's struggling to meet all of our clients' lodgement commitments. Is there someone we can contact about an extension or help or things like that?
Really good question. Was it Chris? Really good question, Chris. So we are trying to expand within tax agents, expand the awareness of our supported lodgement program. So I might talk a little bit about improving lodgement performances as well as supported lodgement program, if that's okay. So in helping people to improve their lodgement performance, we are developing a number of self-help videos for tax agents who may not have had to think about this as much as before, but also if you've got new staff. And we're reaching out to some of those staff where we're kind of starting to reaching out to some of those agents where we're starting to see perhaps their lodgement performance just dwindle a bit to kind of see the assistance that we can provide. Look, we know there's been like natural disasters and COVID over the last few years, and some of those things have resulted in increase in requests for lodgement deferral. But we are seeing quite an increase in lodgement deferral, and it's probably not something that going the way it is that we think should continue. And seeking deferral is really about like where there's unforeseen or exceptional circumstances. But we are seeing like agents that routinely ask for the same clients every year for the same reasons for deferral, or essentially get the same justification in all of their lodgement deferrals for clients. We're seeing people seeking deferral, agents seeking deferral well ahead of time as like just in case I need it, and the other one is we're seeing agents saying, well, we're just continuing to wait for information for clients. So obviously, people being aware that deferral is about where there's exceptional circumstances or unforeseen circumstances in your practice. And where that does occur and you've had an event, like maybe the death of a staff member or something like that, which is unfortunate and does impact your practice, there is the supported lodgment program, and you can just look for that on the ato.gov.au website, tell you how to get in contact. That's really about helping those practices where they really had an unforeseen issue, and helping them to get back on track. So working with them around restructuring the lodgements and the deferral of some of those lodgements so they can get back on track. As they get back on track to a point where then they probably won't need lodgement deferrals into the future, or it'll be very minimal. So where you have had a large impact to your practice because of something that's unforeseen or exceptional, then supported lodgement program. But there's information on the ATO website about how we can help tax practitioners. That's probably the best place to start.
And so, Tim, from a tax professional point of view, how can tax professionals prepare themselves for lodgement season and also, I suppose, build capacity?
Yeah, thanks, Guy. I guess as a practitioner, I've certainly noticed that our requests for lodgement extensions haven't been as easy to get this year as they have been in the past, and which can be sometimes a bit frustrating as a practitioner because, especially if there's no tax that's outstanding. But I kind of understand that also that it's easy to kind of just sit here and hope that you're going to get on top of things as well and clear that backlog and get back on track. Reality is that sort of once you start getting behind, if you get past 30 June 25 and you're still doing 30 June 24 returns, you're just sort of getting further and further behind. So I guess a couple of things that we think of is how do you actually build that resourcing capacity within your group? So how do you get your graduates up to speed faster? Are you looking for offshore to increase the capacity? The concern there is that you're still, as an agent, you're still responsible for everything. So you have to make sure that you've got the right sort of supervision in place over the people who are preparing the returns for you. But I guess the other thing really, and maybe this is more of an idealistic comment, but sometimes it's also, we all want to grow our practices and so on, but sometimes it's about growing your practices with the right clients as well and sort of right sizing, because it's really hard to get good people. And I think that's probably both in the tax office and in the profession. And so if you're sort of going to, not have the right client mix and you're chasing clients all the time and you're using those scarce resources to try and sort of chase the wrong kind of clients, sometimes you just got to sit back and think, is this the sort of client that I really want on my list? And of course, the other thing is just making sure that your client list is up to date as well, because from time to time clients will move to other agents. So to make sure that's not reflecting on your lodgement performance, just making sure your list is up to date and you're having those regular communications as well.
Fantastic. Thank you, Tim. Well, we're going to move on. So we're going to turn the conversation to cybersecurity, and I'm going to bring Joda in. So, Joda, we all know cybersecurity isn't just an IT concern. So why is it so important for tax professionals to take robust cybersecurity measures?
Thanks, Guy. So really there are two key reasons. The first reason is the breadth and depth of data that tax professionals hold. This is a rich data set that cybercriminals would love to get their hands on. This is because it can be used to facilitate identity theft and tax fraud. The second reason is the impacts a cyber breach can have on your business. The impacts can cause damage, disruption, and reputational loss. It can also cause lifelong impacts on your clients if personally identifiable information is stolen. Because of this, it's really important to have systems and processes in place that help you mitigate the risks and consequences of a cyber breach.
Okay. So what can our tax professionals do to protect themselves, their businesses and their clients?
Okay, so I have 4 key tips that I suggest tax professionals should take to keep themselves, their businesses and their clients safe. We'll start with using a strong and unique passphrase. Always make sure you use strong and unique passphrases. Passphrases are the most secure version of passwords. Passphrases are made up of 4 or more random words with spaces in between them. Something like Holden onion, Samsung, Apple, or something equally obscure. If you're still using passwords, it's time to update them to passphrases. Always remember not to use the same passwords or passphrases across all of your accounts. Using something like a password manager can help you securely manage your passphrases. Though having a passphrase makes your account harder to crack, in the event this happens, you'll need the next layer of protection, which is multi-factor authentication. Enabling multi-factor authentication means there will be 2 or more verification factors required to authenticate you to a service. This can include something you know, something you have, and something you are. Tax professionals should enforce multi-factor authentication across all personal, business, and staff accounts, and regularly provide education on the importance of multi-factor authentication. It is especially important that your email account associated with your MyID is protected with this.
Okay, thank you. So those are really good suggestions. Is there anything else you would suggest?
Absolutely. So next you need to ensure that you regularly back up your information. Regular backups help you recover if your information is damaged, lost, or stolen. You should have digital backups of your information, which make it possible to recover in the event of a cyber attack. Create a plan to back up your files regularly, or turn on automatic updates and read the Australian Cybersecurity Centre's advice on backups. Lastly, it's really important to keep your software up to date and run antivirus software. Software updates have security upgrades in them that make your systems harder to hack. The Australian Cybersecurity Centre recommends turning on automatic software updates and also investing in antivirus software. These things can help to prevent, detect, and remove unwanted malware from your device.
Excellent. Thanks, Joda. These are great tips. Now, we've heard a bit today about digital identity from other speakers. Can you tell us a bit about how that can help with security?
Absolutely. So adopting a secure digital identity provides additional protection. MyID is the Australian government's digital ID app designed to streamline your access to government services. So why should you use it? It protects your personal information with advanced security measures. It provides single sign-on for multiple government services, saving you time and hassle. And once you've proven your identity, it's a simple and secure way to log on. I have some important tips about MyID. Try to get a strong identity strength by verifying your face against your passport. Don't share your MyID with anyone, including anyone in your practice. Enable notifications in your MyID app so you're notified when a sign-in attempt occurs or if your MyID is set up on a new device. Report suspicious activity immediately by calling the support line on 1300 287 539, selecting option 2 and then option 2 again for compromised ID inquiries. And finally, keep the software on your devices up to date.
Excellent. So, Tim, can you tell us about the best way to communicate with clients and some of the common mistakes that may be made?
Sky, I think at this stage, email is still probably the most common way that we communicate with clients. Because the danger with emails is have you sent the wrong information to the wrong client? And it's probably one of, I think within the Tax Practitioners Board, when they put up their statistics about people who've made breach reporting, particularly self-breaches, it has been because they've breached confidentiality. So having some systems in place that try and limit the risk of you sending material to the wrong client is really important. So I know on our emails, it prompts us with before you send an email to an external address, just to tick the box to say, yes, that's the right one. Having those sort of systems in place is really important. Probably something that's not, and so for our bigger clients, we also have portals which we've set up as well, just to allow that sort of more secure way of exchanging information. Probably a couple of things that are not so much around Joda's area around cybersecurity, but just it's also really important to make sure you're allowed to share information. And some of the breaches that we see from time to time might be, say, in a family breakdown, where someone sent a child's tax return or someone else's tax return And for whatever reason, there's a dispute that's happening within the family and that shouldn't have happened. So it's really important to make sure that you actually have the permission of the person, even if you think you have the permission, just to confirm that that's still the case. And probably one last one, which is probably more a practice management issue, and that's just really understanding, I guess, within your own systems who actually has access to different parts of information, because it's probably likely that not everybody in your organisation needs access to all of the information. And it may have been that at some point someone did need that access, but then they've moved into a different role and so they don't need that access. And now that could be internal access to your own stuff, or it could be access into the ATO's information as well. So I think it's good practice just to regularly think about who's got access to information and should that be updated as well.
Fantastic, thank you. So Joda, we've talked about cybersecurity, but what are some practices that you think tax professionals can implement within their business that help protect against fraud and identity theft?
Okay, so there are some practices that you can implement internally within your business that can help. These things include checking the proof of identity for all new clients, questioning discrepancies in proof of identity, securing client information, only lodging for clients whose identity you have confirmed, performing background checks on new employees, not retaining copies of documents used to verify clients, educating your employees on what is appropriate to discuss on social media or by email, and revoking all system and physical access as soon as an employee or contractor leaves your organisation, and regularly reviewing access levels to make sure that they're still appropriate.
Excellent, thank you. So can you take us through the advice tax professionals can provide to their clients to reduce the likelihood of fraud?
Absolutely. So we value our relationship with the tax profession and will continue to work together to manage fraud. As stewards of the tax system, we all need to keep taxpayers' information safe from fraudsters and cyber criminals. We need tax professionals to encourage your clients to use a digital ID, such as MyID, and set the highest identity strength they can achieve to access ATO online services through MyGov. Encourage your clients to download the ATO app to help keep them safe. Improve your own security practices to protect the data you hold and the systems you use when accessing ATO systems. Be alert to fraudsters amongst your clients, peers, and the community. You can report all suspected fraud via the Tax Integrity Centre or to the Tax Practitioners Board.
Excellent. Now, over the last few years, we've seen, or Australia has seen, some large-scale data breaches occur. How can tax professionals prepare in the event one occurs? Okay,
it's a really, really good question. A data breach occurs when personally identifiable information such as TFNs, date of births, addresses, bank account details, or MyGov credentials are subject to unauthorised access or disclosure. The cybersecurity protection measures covered earlier can help you minimise the likelihood of a data breach, but in any scenario, you should have a data breach response plan in the event one occurs. A data breach response plan is the blueprint for what you'll do if you experience a data breach. The plan helps you engage with the Office of the Australian Information Commissioner so the OAIC can contain, assess, and respond to the breach. The plan should contain a list of the contacts for the people and organisations that you need to notify in the event of a breach, and it should have the staff roles and responsibilities for the different stages. It should also cover the documentation that you need to submit to the OAIC. Remember, this is a plan that you need when your systems aren't working, so create an offline hard copy to ensure it's always available when it's needed.
Okay. So it's been really informative with lots of great practical advice, but where can tax professionals go to find further advice, support and resources?
Okay, so we regularly recommend the Australian Cybersecurity Centre's website, which is cyber.gov.au. The ACSC website offers a range of advice and resources for individuals, small to medium business and large organisations. One of the important services the ACSC offers is a 24/7 cyber hotline on 1300 292 371 or 1300 Cyber 1. You can call in the event of a cyber incident. The hotline is there to help and support you through what is happening and provide an instant response over the phone. On the ATO website, you can search for Protect Your Information or QC 19354. If your business has experienced a data breach, let the ATO know on 1800 467 033. Reporting early enables us to put protective measures on client accounts that prevent fraud and further fallout. And finally, you can visit the oaic.gov.au website to find more information about developing a data breach response plan.
Fantastic. Thanks, Joda. Now, I've got something also to mention, and this is about, I don't know whether you've heard, but the government announced in November 2024 their intention to close the cheque system in Australia with a deadline of the 30th of June 2028 for cheques being written or issued. 2028 sounds a long way away. It's not really. And so the government is one of the biggest issuers of cheques. And so the ATO is looking to reduce the amount of cheques that we issue or that we receive from clients. So we'd love to ask tax professionals to talk to your clients about alternate payment methods that you can find on ato.gov.au, and that you always include your client's financial institution details when you lodge. Of course, if your practice runs a trust account, include those. Because what I found out the other day is if you leave this blank, it'll actually remove any existing details and may result in delayed refunds. And I know everybody wants their refund fast, but refunds can actually be delayed up to 90 days if we don't have the taxpayer's financial institution details. So we want to get people into the routine and the habit of just getting things electronically and paying for them electronically where possible. Now, I'm looking at questions, and you've even got one just for yourself, Rob.
I was going to, just given we've been talking about security, I was actually going to just say the one that I'd see there's one up there from
yes.
Connor O'Mara about, can the ATO please put more fraud protections into place? So I think we are continuing to roll out fraud protections. I think the ATO app changes I've talked about earlier, and we will continue to roll things out through, and we have had funding from government around counter-fraud initiatives. I think, though, listening to Tim, listening to Joda, I think there's a role. It's like making sure that we talk to taxpayers or our clients to help them get as high up on their MyID strength and as they can. We're doing a lot of promotion at this time of the year as tax time around reminding people about scams, but also about not giving away your personal information to people you don't know. Yep. Tim's talked about things you can do in your practice to protect your practice, because obviously these impact not just the taxpayer, but they can impact your practice, right? And Joda's talked about stuff as well. So I think we're definitely doing stuff, but I think for this, around protection and fraud. But I think for this to work, we really all need to be involved in making sure that we're playing our part to really stop that. I think it's just not on the ATO; it's on tax agents, it's on taxpayers. Yep. We all play a part, and I think that's a really important message. The ATO is definitely continuing to think about what we can do on our part, but we do need everyone, and including tax professionals who play a really important role in the system to all kind of combat fraud and scams.
Yeah, definitely. I think even as an individual, I think about the amount of personal information I put on Facebook or Insta or things like that. And I think I've got to get better at making sure things are secure and only giving out the information that I'm comfortable with handing out.
And I don't know if you've ever looked at when you go on your MyGov, you can look at the login, at the login attempts. And I showed this to my wife a while ago, and she's like, I didn't make any of these. And I'm like, yeah, that's the thing. People are constantly trying to hack your account, which goes to the point around, high online strength, passphrases, those kind of things. So, a role for all of us.
Yep. Now I've got another question from William. How is AI being used within the ATO? Anybody want to take that one on? Tim, you're out of it.
I can talk about it from the perspective of, I won't talk about AI. I'll talk about it from the perspective of data and analytics with respect to tax time. And I think what I'd say there is that, we do get a lot of data from a lot of sources, and we do try to use that to both prompt people before they lodge their tax return, but we use that in the tax return process where we can, where it's high, we have it a high enough confidence. And then we also use it where something might not look right in someone's tax return. We do get a lot of property investment data. So we do use a lot of data and analytics to make sure that we can help people get it right, but also focus where things don't look right. And I think in that space, we'd say as well, just to tax agents, just to encourage you where you do see a prompt, where we do provide you a prompt around we think someone's disposed of, some shares or crypto or a property, that you do kind of have that conversation with your clients at tax time.
Excellent. Now, I don't know whether I dare open it back up, Rob, again. I've got a question from Howard saying, if you're eligible for the Medicare levy exemption, are you still liable for Medicare levy surcharge?
It's a good question.
Howard's as confused as I am.
I think we'd have to take that one on notice.
Okay, we might take that one on notice. Excellent. Now, before we leave, or before we finish up, we'd like to invite you to register for our upcoming open forum on Tuesday, the 24th of June. Our ATO open forums are another information source for tax professionals to hear about upcoming changes, to interact and to ask questions. Your attendance may even contribute towards your CPD with the TPB. Our next open forum will include more information on cybersecurity, particularly how to enhance your cyber hygiene, Pillar 2, global and domestic minimum tax and how the rules apply, and the super guarantee rise to 12% and who's affected and excluded. To register, go to our website, ato.gov.au, and in the search bar, type open forums. The first link in the results will take you to the page. Tim, before we finish, and you've only got 30 seconds, is there anything you'd like to add from a tax profession perspective?
Just really quickly, I mean, most agents want to do the right thing. Most clients want to do the right thing. Every now and again, someone won't do the right thing. The thing to remember is your reputation as an agent is your most valuable asset. It's what attracts business and so on. So you really need to protect that with everything you can, and you really need to think carefully about the types of clients you're involved with, the types of advice you give. But it's also not just about you, because what we've seen over the last 2 years is that other people in your firm can also taint your or tarnish your brand and reputation. So you really need to make sure that everybody who you're associated is with, business partners, staff, everyone is on board for doing the right thing, because your reputation is absolutely everything for you.
Fantastic. Thank you. Now, just been told we've got longer than I thought we had. So I've got another question from Sandy. In regards to checking people ID, if we check via driver's license or passports, which is really good, I don't think we should keep a copy on file, and is that right? It's another item that would make us a target for cyber attacks.
Yes.
Yep.
I'm happy to take that one. So, once you've done that check, you don't need to keep that on file. There's no reason to store that information. Would you agree?
Absolutely. In fact, that's what we do. I mean, if you I get very nervous when someone emails me that sort of thing, because then you have to deal with it. So absolutely, I'd rather just cite it and then just make a note that we've seen it.
Yes, and even I wouldn't even take a copy of them.
No.
Okay, because you got the lovely blue secure bin, right? People might think, what's in the secure bin? And when you're out, they might come into your practice and steal your blue bin. So not a great idea to take a copy.
I would say, if we're talking about IDs though, and know your customer, know your client rules, and I know they apply differently for new clients and old clients. What we would say though, if something doesn't look right about one of your old clients, even if you've serviced them for a few years, then undertaking additional checks is still a good thing. So that's another thing that can help your practice and help your clients. Is thinking about your client rules with respect to your old clients as well as the ones you're onboarding.
Okay, we've got another one. A work from home question from Marina. Since Wi-Fi, internet, and even mobile is a fixed monthly amount, how can they be shown to have attributed to additional expenses?
So once again, it's going to depend on which method that your client is wanting to use, whether it's the fixed rate method or the actual cost method. They can use whichever method gives them the best outcome as long as they meet the record keeping requirements. I did mention earlier that there's information on our website about how to apportion some of these trickier things where there's a fixed cost or a fixed rate to the product or service that is the expense that is being included from a working from home perspective. So the ATO website does kind of outline different ways that you can show the apportionment. For example, on a mobile phone, just include taking a month sample of your usage of that for a typical month, that would be the norm, and showing that as kind of your justification for how you've apportioned that expenditure between private and income generating for the purpose of your working from home. So the ATO website is probably a good place to look for the different types of expenses here.
Now, I know that everybody is eager to get their tax return in and to get their refund. And we've got a great question from Grazilla. If we have all pre-filled information, can we lodge tax return in July this year, or will audit be completed on these clients like last year?
So all our clients, all taxpayers at Lodge have the same checks done on their return. What we say though is where people are lodging before pre-fill, they're more likely to make a mistake, and they're more likely then for that to be held up or for it to be adjusted later on. And so that's why we're continuing to encourage people to wait for pre-fill, because sometimes, for example, if someone's done a few jobs, they might have forgot about the job they did late last year, or they might have forgotten they sold a few shares. So it's, waiting for pre-fill is important in helping your clients not make mistakes and making sure everything's there. They obviously still need to check it, add in the expenses, but definitely we do see that there's an increased chance of people getting it wrong, and there's an increased chance of then us either correcting that or asking questions where people lodge before pre-fill. And our preference is obviously people get it right the first time. That's better for the tax office, it's better for tax practitioners, it's better for the taxpayer. So it's the pre-fill. Now, taxpayers who are using the ATO app can also see when everything's tax ready for them as well. But we do continue to encourage people to wait for pre-fill just because of the fact we do see more people make mistakes when they don't wait for it.
Cool, thank you. And Anthea has asked, how do we verify the client's ID?
So we would usually ask for a passport or driver's license. I've never had reason to believe that they're not right, but that's a really interesting question. I guess if you have concerns about whether they're fake ID, but I guess we've up until now just accepted the license or passport.
I would say you just need to be practical, right? Does the person in the photo look like the person you're dealing with? Do they seem genuine in their interaction? Is there any reason to believe that it's not the person? So I think you just need to use your common sense. Yeah,
exactly. I think you got to build it into your practice, but also I know of some agents that only deal with their clients online, and so sometimes it might be, well, get them on Zoom, have them hold their passport, and you can zoom in and see the passport and see the person. So,
and that might also be a question that we can take on notice and speak to the TPB about. Given so,
I would hope that as long as you've taken reasonable care and you've exercised professional judgment, and you don't have any reason to suspect that's wrong, then as an agent you've done everything you could reasonably be expected to do.
Exactly. Now, thanks for all your questions, everybody. We've answered as many as we can. You can always go to www.ato.gov.au for more info. Please share your feedback on today's live webcast with this 2-minute survey. The link will be in the chat screen. You can also access the exit poll by clicking the poll tab in the right tab of the Slido event page. Complicated. I wanted to thank the panel members here with me in Canberra for the insightful and rich discussion. But most importantly, I want to thank you, our audience, for taking the time to engage with us. I encourage you to continue to engage with us through our web material and through our newsletters. I wish you a warm goodbye. Thank you.